In terms of lessons learned from defending people in audits of cryptocurrency reporting, I think one of the first lessons that comes to mind is you need to work with a crypto knowledgeable professional. Do not do it yourself. I talked to one couple. They were both intelligent. They both had doctorates. They had lost an immense amount of money in crypto trading. They got an audit, and they thought because they were smart, they could just talk to the auditor and talk them out of the whole thing and tell them they had this big loss. And the auditor doesn't care how smart you are or your rationale or arguments. They just want the documents. And then within the first month, they had contacted the supervisor of the auditor and basically aggravated that auditor and the supervisor. It had only simply made things worse. They would have been far better off working with a professional. Second lesson learned would be that if you get a 1099 from a crypto firm like a Coinbase or whatever, it might be there's different types of 1099s. You may not like the number. The number might be immensely high only because they're reporting one side of the story, which is how they have to do it for the IRS. But when you do your taxes, you have to acknowledge on the tax return that particular 1099. You have to enter it in. It goes into the records. The IRS knows that you addressed that 1099 in your tax return. Otherwise, what happens is I had one client, 2018, he had gotten a 1099 from Coinbase that said $4 million of income. Now that was because he was a high frequency trader, and that was the positive income. It did not reflect his costs in all of that, which were quite significant. And he failed to list the 1099 on his tax return. And the IRS then generated a computer-generated audit. They do when they feel you've forgotten to report a 1099. Well, when we actually did the calculation, he had actually lost $17,000 that year. But he wouldn't have experienced the hassle if he had at least reported and acknowledged the 1099 on his tax filing. Now, if you're doing it yourself, on your TurboTax, you're going to enter it in, or you give it to your accountant, they're going to enter it in. Now, you may need to subtract that number off in order to get to a correct income reporting, but you at least need to recognize it. So recognizing on your tax return all the 1099s that you receive is very important to avoid underreporter audits. The next lesson learned would be to sign up for our Tax Shield service where we monitor your tax return on a monthly basis. We had a client who got flagged for an audit. We can see the flag internally on the IRS systems 2 to 6 months before the audit letter got sent to him. And what had happened was he had crypto income in 2018 and he had never filed his tax returns. So we went in and we were able to calculate his gains, prepare the tax returns, file them before the audit letter got issued. And in fact, typically we say you're going to avoid any penalties, but another benefit that happened for him was the audit got completely canceled. So it never happened in the first place. And the last thing you want is to have your name in your face on some auditor's dartboard. So we were able to prevent that from happening altogether. Tax Shield is a product we have. You go to CryptoTaxAudit.com/Tax Shield. Really, nobody else is offering it, and it's a perfect product for all crypto investors because we're watching the IRS because they're watching you, and we can give you the heads up before you get these evil audit letters, and you can save yourself a world of grief and expense. Other lessons learned would be if you have a complex tax situation, you should take time and work with a very crypto knowledgeable person in preparing the tax return. Still, 95%, maybe more of all tax preparers have no clue what to really do with complex crypto tax situations, how to handle staking, how to handle liquidity pools, how to handle bridging from one chain to another, how to handle the reporting of that, airdrops, rewards, what you do with those things. They're oblivious. Even tax software that says they support crypto, like TurboTax and TaxAct, do not ask you the hard questions because they don't want to get stuck with breaking their accuracy guarantees. They just don't. They throw the burden on you. By all means, that recommendation would be to deal with a tax professional. It's going to cost you more, but it's going to pay for itself in the long run.